It's the last day of the trading week, and what a good week and what a good month it's been. It's the last day of the financial year as well. So, you know, things have panned out pretty well, especially for our own markets. The MSCI India index is up almost 9% in this month. But the SGX Nifty has also pulled back from the lows of trade. So let's see whether we scale higher levels. What are the stocks to look at today? Our entire research team is here to give us that list. Anuj, what are you looking at?
So two non-index large caps, both PSUs. That's, I think, my theme. Canpin Homes. Yesterday we spotted Shriram Transport. I think Canpin Homes, valuation-wise, still among the cheaper NBFCs, among the better NBFCs. Fundamentally, a very strong company, and technically has broken out of all levels, so all moving averages. So that's something to watch out for. And HPCL, and I'm watching out for HPCL on the green side, despite the fact that it's going out of the index, because it remains in a strong uptrend. Of course, because it's moving out of the index, initially it may fall, but anecdotally stocks do well after they get out of the index. So that's something to watch out for.
Oh, that's an important wisdom, Anuj. I would have thought that they would move out of all these index funds and therefore they may fall. That's worth watching. We have to watch for all the IT stocks for a couple of reasons. Reema, tell us why.
Well, to start with, because Accenture's numbers look very good. The stock was up more than 5% in trade yesterday on NBFCs. The numbers beat estimates. The company's upped its full-year guidance. So on the Q2 numbers, they've delivered a 9% year-on-year constant currency growth, which is at the top end of the company's guidance of 6 to 8%. The full-year guidance has been upped by 50 basis points to 6.5 to 8.5%. The only negative in the numbers was the muted financial services performance, but there the company has said that it will pick up in the second half of the year, and even analysts are saying it's a company-specific problem. The other key internal, which is looking very strong, has been the order book, and we've seen that, order wins, and we've seen that even in the case of Indian IT companies. So the order booking for Accenture stands at $11.8 billion, which compares with $10.2 billion in the prior quarter, so a significant pickup. And then we had the rupee depreciation as well, Lata, which took place yesterday. So it bodes well for the Indian IT companies.
Oh, so it does. Thank you very much, Reema. Sonia, to you, Eicher Motors, more and more brokerages are getting worried?
Yes, in fact, it's the same issue, right? Higher inventory levels, dealers facing a lot of stress. In fact, Royal Enfield is seeing dealer stress for the first time, and that's what Bank of America Merrill Lynch points out. They've downgraded the stock to an underperform. They've cut the target price drastically to 19,000. They say channel check suggests that dealer stress has risen for the first time. In fact, at the dealer level, volumes are down almost 20 to 30%, and same-store sales growth have fallen about 20 to 30% in some cases, versus a 3% growth on a year-to-date basis that Royal Enfield has seen. They've lowered both their FY20 and FY21 EPS targets. They've lowered their margin targets as well, because they say in all likelihood, Eicher Motors will have to raise dealer margins and give more discounts to offload their inventory, and that could put pressure on their margins.
My only point is that the stock is 50% below its all-time highs. So is not that in the price? I mean, the market saw it before brokerages saw it.
Yeah, the stock prices make opinion, of course, as we know, and a large part of that perhaps is in the price, but you never know. Anisha, why Adani Ports?
Well, there are three reasons why I'm watching out for Adani Ports. First is their announcement to the exchanges regarding acquisition of a logistics business, which has presence in Nadan as well as Eastern Hinterland for an enterprise value of around 330 crores, valuing it at around 1.3 times FY18 revenue. The second news bit is the unverified reports that we are getting that Adani Ports is interested in GMR's stake in Kakinada Port as well as SEZ. So watch out for development there. And thirdly, the management spoke at the CS conference, and the commentary is rather positive. They talk about the multiple opportunities they are looking at, both in India and abroad, how the group debt level will go down given the CRC resolution we are expecting for the Mundra power plant, as well as they have given some numbers for the future outlook for Adani Ports for FY22. They say that the revenue and EBITDA growth will be at 14% CAGR, and also the cargo outlook looks strong. Back to you.
All right, thanks a lot for that. Well, it's the Credit Suisse conference that is actually dominating Mindspace. There were other managements too. Motherson Sumi there?
Yes, and the commentary was quite cautious. So, you could perhaps expect some pressure on the stock today. More importantly, they said that they may miss their 5-year revenue target because of a shortfall in inorganic growth. On the organic front, they may still achieve their target, but because they may not be able to do as many acquisitions, they may not be able to meet their 5-year revenue target, which is very important. They also said that the market environment is quite subdued, which is posing some near-term challenges because in the standalone business, the margins margins will be impacted because of the ramp up in the Sanand and the Indore plants of their clients like Maruti. That will impact margins. But even in their overseas business, SMP plants, particularly the ones that supply to Audi, they've been hit because Audi has seen a big slowdown. So on account of that, both the domestic and the export business are seeing some demand challenges. So perhaps you could expect the stock to be in the red.
Okay. Well, it has been seeing those pangs for some time now. Mangalam, cheer up on Britannia.
Absolutely. It enters the Nifty today, replaces HPCL, so we'll keep an eye out on how that pans out in today's trading session. But in the past, it has been a big wealth creator. With Britannia entering the Nifty, the consumption stocks weight on the Nifty increases to just under 12%. The previous revision of the Nifty also had a consumer stock enter, which was Titan on August 2nd, 2018, and we've seen how that's panned out. Britannia over the last 7 years has actually, over the last 5 years has actually moved 7 times. So let's see how that pans out. Just for today, it would be a 50-50, but from a long-term perspective, it's a good day and perhaps a treat.
I was waiting for all those word plays. I thought he'll say, keep your cake and eat it too, the cookie that did not crumble. Good one.
Well, just some trivia, Lata. Britannia actually started in 1892 with a capital of 295 rupees. 127 years later, the market cap is 74,000 crores. So that's 18.5% CAGR over 127 years. So that's talking about a long cake.
Okay, that's the third time Britannia is entering the Nifty, by the way. It's entered twice and has been removed. That's the consumption cycle. When we were in Delhi University, in Delhi there's a there's a large Britannia factory, and that's a big landmark.
Britannia bus stop.
Britannia bus stop. Just Britannia. Okay. Like, how the Delhi conductors talk. So from that time I've been seeing, and look at the phenomenal market cap jump. Colgate, Britannia, all these products we've grown up using all these, and anyway.
But I also prepared for one word play because I knew Mangalam is going to be prepared with it. So, Mangalam, Britannia has been the best Nutri choice for most investors, right?
There's only one thing I can say. There's so much love you all are talking about Britannia, nostalgia, Little Hearts. That's the product.
Okay, let's move on. We are talking about stocks here. Lata, what about metals now?
No, I'm just extending the rupee fall idea. Landed prices of all imports become expensive when the rupee falls, and therefore there'll be a momentary positivity for metals because they compete with landed steel, landed copper. As well, today, and Manisha will explain this in greater detail, metal prices are higher in Shanghai and on the LME. For both, you should have a positive start to the metal stocks, and then, of course, they'll take their course.
Okay, so in case you missed out on any of the stocks, let's do a quick recap and see which ones could be in the red, which ones could be in the green. Stocks with positive news flow today: Infosys, TCS, Adani Ports, Britannia, Vedanta, Hindalco, Tata Steel, as well as GSW Steel. So basically IT, metals, and a couple of these stock-specific names like Britannia. Stocks with negative news flow are the auto stocks, so Eicher Motors and Motherson Sumi, because of negative commentary over there.
Okay, so that's the stock to keep in focus. That one issue that we have been on top of, that is our colleague Ritu Singh has been top of, is the SR case in the bankruptcy courts. The insolvent company's lenders, that is bankers, are considering an additional payment of about 1,000 crore rupees to the operational creditors. Remember, in the waterfall, the operational creditors don't stand much of a chance. It's first the financial creditors, and then the unsecured creditors, and only then the operational creditors. Ritu Singh is here on how the decision and when the decision will be taken.
That's right. After much deliberation, the lenders of SR Steel have agreed to vote on a proposal to allot an additional 1,000 crore rupees funds to the operational creditors of SR Steel, and which will be in addition to 196 crore rupees that has been offered by ArcelorMittal in its resolution plan, which means the total payment to the operational creditors against their dues of 4,700 crore rupees will now be 1,196 crore rupees, subject to the voting outcome of the Committee of Creditors. Now, this additional 1,000 crore rupees will come from the working capital adjustment, which means the lenders will still be able to make about 92% recovery as originally envisaged. But as far as Standard Chartered is concerned, the lenders are very clear that they do not want to pay Standard Chartered any more than 60 crore rupees, which was originally part of the resolution plan, and they plan to move the Supreme Court, if required, over the treatment of Standard Chartered, arguing that it will be paid as per the security that it has against that loan of 3,500 crore rupees that it has given. Now, both of these resolutions will be put to vote by the Essar Steel Committee of Creditors starting Friday, and the voting will last for 24 hours.
Okay, we'll keep coming back to you for more on that. Ritu, thanks so much for giving us an update. For now, let's take a quick break. After an almost 8% rally in the month of March, how do you approach the next month? Plenty of technical advice coming through with Ashwini Gujral, Mitesh Thakkar and Prakash Gawal.